morning. My name is Miguel Gonzalez, and I'm a certified retirement counselor with over 20 years of experience helping clients in retirement income planning, overseeing investment of funds, and designing retirement plans. Let's talk about the rules for charitable giving and how working with a financial professional like Cortburg Retirement Advisors can help guide you through the changing maze of IRS rules. Contributing to charities comes with a load of tax rules. Here are a few things to think about. Every April 16th, or in 2020 it was July 16th, should remind us of everyone's least favorite season, tax planning time. Because starting well in advance of the deadline for filing taxes is simply a prudent thing to do, now consider keeping many tax tactics in mind when preparing your next year's return, especially if you hope to lessen your taxes and itemize deductions on Schedule A. These deductions might include medical and dental expenses and unreimbursed employee business expenses, and of course amounts given to charities. Deducting charitable contributions can potentially whittle your taxes, but rules for charitable giving can be confusing, and you must be careful before entering that deduction. What kind of donation will you make this year? The maximum you can deduct depends on whether you donate cash or property and on the type of charity as defined by the Internal Revenue Service. Is it a public charities that don't pay private individuals, engage substantially in legislative activities, or take part in any political activity? Is it a private operating foundation that spend at least 85% of their adjustable net income or its minimum investment return on its exempt activities? Or is it a private non-operating foundation, principally providing grants to other entities or to individuals for charitable or other exempt purposes? The IRS rules are always changing. In most years, any donation generally maxed out at 50% of your yearly income minus deductions or your adjusted gross income, your AGI, and deductions for donations to certain groups such as veterans organizations, fraternal societies, nonprofit cemeteries, and other maxed out at 30% of your AGI. But guess what? The IRS put a temporary limit on charitable contribution, and this is expected to change yet again. So be careful before you donate. Taking directly from the IRS website, this quote, "In most cases, the amount of charitable cash contributions taxpayers can deduct on Schedule A as an itemized deduction is limited to the percentage, usually 60%, of the taxpayer's adjusted gross income, AGI. Qualified contributions are not subject to this limitation. Individuals may deduct qualified contributions up to 100% of the adjusted gross income. A corporation may deduct qualified contributions up to 25% of its taxable income. Contributions that exceed that amount can carry over to the next year. To qualify, the contribution must be a tax contribution made to a qualified organization made during the calendar year. Contributions of non-cash property do not qualify for this relief. Taxpayers may still claim non-cash contributions as a deduction subject to the normal limits." So, where do we go? What do we do before donating? To whom you want to donate. The IRS requires that you give a qualified organization in the U.S. to claim a deduction. An organization's merely claiming tax-exempt status doesn't automatically make a donation deductible. Many major charities fit the criteria, but double-check that your organization of choice makes the list. The IRS offers a search tool to look for qualifying organizations. Learn what you may not know. You can never deduct some deductions, for example, such as Bibles, gift to individuals, and donations to political parties or candidates. Services provided are not deductible. Among other fine points of deducting donations, for deductible cash donations, the IRS requires standard documentation of a bank record, payroll deduction, or written communication from the qualified organization. This communication must include the name of the organization and the date and amount of the contribution, regardless of the amount donated. For all donations, cash and property, more than $250, you must show the documentation plus written acknowledgement of the donation's amount and whether any portion of the donation was in exchange for goods or services. These few reminders only skim the surface of charitable giving. Best to check with a financial professional before you consider giving until it hurts. Once again, this is Miguel Gonzalez with Cortburg Retirement Advisors. Please take a moment to click the like icon and don't forget to subscribe to my YouTube channel to receive our weekly video podcast every Monday morning. Thank you for watching, and I will see you soon.